Let me ask you something. When you last went to the polls, municipal, provincial, or state, federal, who were you voting for? Your local representative, your member of parliament or Congress, maybe a party leader or a president. Now let me ask you this. Did you vote for the person who set the interest rate on your mortgage? You did not. Nobody does. Because that decision is made by the people who were never on your ballot. In the United States, interest rate decisions are made by Federal Open Market Committee. The FOMC has 12 voting members. 7 of them sit on the Board of Governors of the Federal Reserve, appointed by the President and confirmed by the Senate, each serving staggered 14-year terms. The other 5 are drawn from the president of the 12 regional Federal Reserve banks. The president of New York Fed always has a vote. The rest rotate. Here's the important thing to understand. These 12 people meet 8 times a year. They vote on federal funds rate, the rate that flows downstream into every mortgage, every car loan, every credit card, and every business loan in the United States. Their decision reaches into every kitchen table conversation about money in North America. And they were appointed, not elected. Their terms run longer than any presidents. And the regional bank presidents who rotate in are appointed by directors of the respective regional Federal Reserve banks, not by the public at all. I want to be careful here because I'm not saying the Federal Reserve is corrupt or that these are bad people. Many of them are highly accomplished economists who take their mandate seriously. The Federal Reserve has a mandate from Congress, maximum employment and stable prices, and it operates within the mandate. This is not a conspiracy. It is a structure. What I'm saying is that the structure concentrates enormous economic power in the hands of people who are not accountable to you in the way your elected representatives are. When the Federal Reserve raised interest rates aggressively in 2022 and 2023 to fight inflation, mortgage rates in both the United States and Canada doubled in less than 18 months. The average 30-year fixed mortgage rate in the U.S. went from around 3% in early 2022 to above 7% by late 2023, according to Freddie Mac data. For a family trying to buy a first home, the rate change added hundreds of dollars per month to a mortgage payment on the same house. It priced millions of people out of home ownership in the exact window when they were trying to enter it. That decision was made by 12 people in Washington. None of them were on your ballot. None of them will face consequences at an election for what that decision did to your family's ability to buy a home. In Canada, the structure is different, but the principle is the same. The Bank of Canada governor is appointed by federal cabinet, appointed, not elected, to 7-year term. The governor chairs the governing council that sets the overnight rate, which flows into every variable mortgage, every line of credit, every business loan in Canada. One appointed person backed by appointed counsel making decisions that touch every Canadian household directly. Again, I am not saying these people do not work hard or that their intentions are not good. What I am saying is that there is a gap between the decisions that most directly shape your economic life and democratic accountability we are thought to believe governs how our society runs. You vote, but the person who most directly affects the number on your mortgage statement was not on your ballot. And here's the thing that nobody talks about when they talk about the housing crisis, the affordability crisis, the cost of living crisis. These are not mysterious market forces that arrived without the cause. They are the downstream consequences of specific decisions made by specific people inside the specific institutions. Understanding who those people are and how they got there is the first step to understanding why things change slowly and what would actually take to change them faster.